Hello, chart watchers and Decision Point faithful. Welcome to this Thursday morning, July 2nd, Decision Point show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. We hope to have you back as one of our DP faithful. All right, Jad, it's been an interesting week. How's everything going up there? I know we're waiting for a power outage.
Right. I might be bounced off for a minute or two when when the Edison cuts the power.
Yes.
Between then and when my generator kicks in,
There
hopefully.
you Yes, we'll all be good. It just might take a minute or two. Uh, yeah, actually, it was a really great day in the market. I mean, considering at least for the large caps, but we're still up against that overhead resistance. But let's go ahead and look at the agenda before I get to talking about all that.
Right.
All right, so I want to concentrate today on materials and gold miners. I think both of those areas have really shown a lot of promise. And of course, yesterday we did get an intermediate term trend model buy signal on materials. We'll go over the indexes as usual, and then as a special treat, Carl will be going over his earnings charts as the first quarter earnings are now imprinted into our chart, our earnings chart. And then I'll finish with the DP Diamond of the Week. And actually, I might give you an extra one when I talk about materials. So stay tuned for that one. All right, but before I get started, do go to decisionpoint.com if you haven't already. If you're a fan, you like what we talk about here on the show, you can just get even more of that if you subscribe to our reports. And we'd love you to try it out. Just go ahead and subscribe to the bundle package. Use the coupon code CWDP trial, and you will get your first week trialed. And if you don't want it, you can cancel before that week's out and we won't charge you. And if we happen to charge you by accident, no worries, I will take care of it for you. So go ahead and check out our reports. All right, DP scoreboards. We've had a lot of flipping back and forth of these short-term trend model signals. We don't really follow these all that closely. It's just kind of handy to have that block filled on our DP scoreboards, but we do consider a short-term trend model buy signal to be a 5-day EMA positive crossover. It's 20-day EMA. Dow hasn't quite done that. I was expecting it today, but not quite yet. We will have to see if it can follow through with that tomorrow. And there you go, our DP sector scoreboards. Everything is on a buy. Utilities remain in the intermediate term on a sell signal, as well as in the long term. Definitely not a great sector to be in right now. There are certainly other choices. But like I said, materials have really started to perk up, and I'm pretty looking pretty good overall. I'd like to see some of these long-term trend model signals go away, but those are golden crosses. That's what we're waiting for, a 50, 200-day positive crossover. Not there yet. All right, let's go look at some of those charts. I will start off with our SPY chart that I cover every day in the Decision Point Alert. Carl covers it on the Fridays. So again, decisionpoint.com. All right, so what we've been looking for is we've decided that this really should be focused in on a symmetrical triangle. Now, textbooks tell you that these are typically continuation patterns, and so the expectation would be an upside breakout, but Carl can tell you, and I can tell you that that expectation does not always happen out of a symmetrical triangle. So bullish biased pattern, but certainly not foolproof at this point. Looks like volume was pretty much on average right now. It looks we've come back a little bit on the volume. One of the things I wanted to point out though is this VIX. We do invert the VIX so that oversold is on the bottom, overbought is on the top. And we came down here, we didn't actually puncture that lower Bollinger Band, and it did turn up. I was really worried because we've been staying under it, the moving average for the VIX. But now we're seeing that pop up above it. We haven't punctured that upper Bollinger Band, and the PMO has decelerated and is starting to turn up. So, it looks like things are lined up for an upside breakout out of that symmetrical triangle, despite everything we know, Dad, about what's going on in the economy and with the virus and earnings. And speaking of earnings, I think this would be a good time to pass it over to you.
Okie doke.
There it is.
Okay. While we're looking at you had a green arrow pointing down. Not sure why that was there.
Oh, it was green, showing that we did get that puncture.
Yeah, okay. Well, of the 20-day moving average, yeah. But normally I don't put an arrow except at the band. Just so
I have it so that when I talk about it in the DP alert, everybody will know what I'm talking about.
Yeah. Okay. It's a little different this time, but the earnings for the first quarter were finalized, and what we look at on this chart, I call it an earnings chart, but what it is really is a value range chart. We have color bands. Red equals is where the S&P 500 would be if it were overvalued at a PE of 20. The blue line is fair valued at PE of 15, and the green undervalued at PE of 10. Would that we ever see that again?
Yes.
We've got a real mess here as far as I'm concerned. First of all, you've heard the expression lies, damn lies. Well, I've modified it to lies, damn lies, and earnings estimates. Because, okay, we have this is where we set up at into the first quarter. We have second quarter and third quarter making a low here, and then this is where the estimate is for fourth quarter. That's what I'm saying. This is a heck of a jump, and truthfully, it's got to be hard for them to figure out where they'll be by the end of the first quarter of 2021. I mean, it's just such a mess out there that it just got to be impossible to figure that out.
Yeah, I have to say it's hard for me to figure out, and there is so many. It's interesting. I'm going to be doing a special a bunch of us are talking about charting the market over the next 6 months, and I'm sure it's just like this. There's so many unknowns right now, more so than normal, and it's going to be quite challenging. And I don't know where they're coming up with those estimates, but obviously you were an did accounting there are ways.
Right. It's normally you project out and allow for any bumps you might hit and any and basically you're projecting out in the future, following that trend line. And I don't see how you get a trend line on the earnings for many of these people today. But
yeah,
one of the blogs I follow is Evergreen GavCal, and their headline from last week was no revenue, no profits, no problem. And that's basically where we are here. We've got revenue dropping like crazy, earnings, and right now the PE for the S&P 500 is 20, almost 27. That's
wow,
just out of whack. And as far as I'm concerned, I was thinking about it. This is a lot like the bubble, the .com bubble. We had the market being driven up and was mostly large cap stocks. And it's just today would be a perfect example of that. We have the have SPY was up 0.7%, and RSP, which is the equal weighted version of the S&P 500, it was up 0.14. So, I mean, it's uh, all large cap stocks that's just concentrated in there. Now, I, I see people and they think, oh, this is just wonderful how they're picking it up. But, you know, it's just unnatural. It's not going to work out in the long run.
No.
Who knows when that will happen.
Right. So at this point, you have to be nimble. I mean, that's, looking at the market every day, it's not easy for everybody to be able to do that. But really, we have to pay very close attention to these indicators. And, I highly recommend that if you don't have your own indicators, that, you can read our stuff, and we have plenty of good ones. And it's really saved my bacon coming out of this bear market, because there's so many reasons why we should be expecting all of these big breakdowns. They hadn't been happening, but our indicators were pretty much right on and letting us know that. So it's very helpful at this point. And I think that's the only reason I've been able to really prosper during this particular time, which is unusual.
This advance from the March low has been, it's the only thing that resembles it is, final um, parabolic blow-offs, and you don't see it in the, you know, anything that this long. You don't see anything this long and enduring and that steep. It's just not I don't know when it's going to go, but the whole thing is you should have a sell discipline. Some way that you don't get caught in the next down uh, draft, which who knows when that might be.
Right. Exactly. And generally, as we saw in February and March, it can be very quick.
Yes, indeed.
All right. Well, let's go
Let
ahead.
me,
I'm
let
gonna.
me look at it
Oh
one
yeah.
more here.
Yeah, absolutely. I'm sorry.
Um, yeah, here we go. PE is 26.78, and this shows the drop in earnings that we got the first quarter, and um, yield 1.91, and the payout ratio is still under one, so that's I'll give it back to you.
All right. So let's talk about materials. First, I'm going to share the sector summary for the S&P sectors. This is from the past week. And as you can see, we've got real estate certainly in the lead, but look at materials coming out of the woodwork here. And so it isn't surprising to see the change of that signal. Let me go ahead and grab that signal chart. I thought I had that one up, but I do not. Sectors. Now this chart list that I'm looking at is available to you as a subscriber to DecisionPoint with all of the annotations and indicators as they are right here. So if you want those, Carl, you keep them up every day.
Every single day.
Every day. So we do upload new annotations. So that's one of the little bennies you get on our website. But here we go, materials. So I had been looking at it yesterday, and we had gotten that breakout from the symmetrical triangle. It's kind of an itty bitty, but it is staying above that declining tops trend line. Look at the PMO, it's started to curl around for us. OBV confirmation right now, rising bottoms, rising price bottoms. And one of the things that I noted is that we have enough strength here, but we're not overly overbought. We're going to look at the gold miners chart in a little bit, and you'll see a lot of 100% on there as far as how many members are on silver or golden crosses, not golden crosses, but silver crosses or BPIs. Really, the main one is the stocks above their 20 and 50-day EMA. And we see the rise. There's a little bit of a tick down today, but overall, I would say these numbers can support a rally in materials. You've got enough strength in there that I could certainly see the rally continue. And it does seem like it's one of those somewhat beat down areas in a way, and it is starting to make a move to the upside. So one of the diamonds that I presented on Monday, I believe, was from materials. This was before we got our buy signal on the material sector, but this one came up on my diamond PMO scan. And I took a look at it, and it was very interesting to me, and I think you might find it interesting. So it is non-ferrous metals, wheat and precious metals, and I picked it out. We actually can see the RSI has gotten a little bit higher from when I did this on Monday. I had set up a stop area roughly around 7% or at that 50-day EMA as a suggested area that you might want to look at for stop. We had the PMO buy signal that hadn't come in but has come in now. And look at the very nice cup and handle right there with that breakout coming up. So the main issue right now is $44 could be a little bit of a problem because we do have some of these intermediary tops, if you will. But the main overhead resistance is going to be up here at about 47. And if I look at what that would be from here, that is about a 8.5% move, 8% move. So still, I think a lot of upside potential here, even if it can't get above that overhead resistance. So that was one that I was looking at. And, you know, once I saw that XLB come in on Tuesday, was it yesterday? Yes, Tuesday. That's when I was like, excellent. My PMO scan's doing the job it should be, and it had picked out something from that sector the day before we got that signal. So there's your 50-200-day EMA golden crossover, and that's what gave us that new long-term sell signal, or buy signal, my bad. All right, I promised gold miners, so I'm gonna go ahead and pull up our gold miners chart, and feel free to add whatever you would like to that. Because gold, let's look at gold first, just to give us some perspective here. Turn that off. So gold really managed to, you know, it was in this trading range, but it was forming a symmetrical triangle or a flag on a pole. Did get a little bit long in the tooth here on that flag, but we did finally get the breakout to the upside. We are pulling back, but you know, after a nice rally like we've seen in gold, not a surprise to see that. It is well above its 20-day EMA, just like it was the last time it pulled back. The PMO is decelerating a little bit, which I'm not thrilled with, but you know, we had a over 1% pullback, so not quite as. So I think gold is still looking pretty healthy. What do you think?
Yeah, I definitely like gold. And that long-term support notation, I guess we're going to have to take that off.
Oh, I know, it's
It's
really,
going
really
off the bottom of the chart.
yes. Well, there's a lot now. Now we have a lot more areas as well for support. So there we go. All right, so gold miners. Let's move over to that. There we go. Okay, so really similar look as wheat and precious metals, right? That's not a miner, but one of the materials, but we have that same cup and handle look. We've got the PMO buy signal that came in. I was already liking gold miners when it set up what looked like at the time a double bottom. I mean, you could still consider it that. And it broken out over here above that talk that would have been the confirmation line if this were a double bottom, but I've decided I like it better as a cup and handle. Here's what I was talking about, a couple of 100% numbers here. So every component of GDX has its price above its 50-day EMA, as well as, where's that other 100? The Silver Cross, they all have their 20-day EMAs above their 50-day EMAs, 100%. Clearly, that's an overbought reading. But when you're looking at a strong stock or in a bullish move, in a bullish rally, an index, I'm sorry, a sector, it's great to see those numbers. And overbought conditions, as we talk about, and you can see back here, can persist for quite a while. So I'm not overly worried about these big numbers here. I just think they're going to support the rally that I'm looking for that's going to come out of that cup and handle. I expect to see it break above that previous top in May. I certainly hope so. I know my portfolio would like that.
The PMO crossover occurred above the zero line, and that's very positive, really.
Yes, you know, we talk about wanting a PMO that'll turn up in oversold territory. Well, that's true, but one of the great places to see a PMO bottom is usually right above that zero line. And so the fact that we got the PMO to turn up even before it hit that zero line is very positive. And at this point, you know, again, it's not, it's kind of boring to talk about, but we have confirmation. We have confirmations on the on balance volume with these rising, the rising bottoms there. And of course, the BPI is also rising, which is, you know,
I don't think it's a problem, but actually the OBV is got a slight reverse divergence,
reverse.
but
Indeed.
I'm not thinking that's too big a deal.
Right. And for those who are unfamiliar with reverse divergences, I think we can update everybody. I know even some of our faithful kind of wonder about these a little bit, but a reverse divergence is when you see higher on the OBV here, the volume. We use it mainly on volume. But when you see the OBV top reach above its previous top, but you do not see price reach above its previous top, it's considered a reverse divergence. Price should follow volume. If you're pouring that kind of volume in on a stock, you want to see it start to move to new highs, just like the OBV. And if you don't see that, that can sometimes be a problem. But as you said, I don't think that it's not super significant at this point. And I think the bullish. I think what's bullish on this chart is what's looking good. Even that RSI sitting, it's not even overbought. It's just sitting right in that positive territory above 50. Very, very nice setup here, I think, for gold miners. And our diamond of the week last week was Newmont Mining, and I'll just give you a quick peek at that one. So last week we put that as a diamond of the week, and we did get a little bit of consolidation here, but we got a nice pop to the upside, and overall we're staying above the confirmation line of this double bottom. So I still like it. We've got gold looking good. The market, it's helpful when it's rising to give it some wind at its back. Today gold was down, what did we see, over 1%. So you know, it's not surprising to see one of these gold miners pull back, but you can see how lovely this chart is, I'd say. It's still looking really good. So that was last week's diamond of the week. All right. So I'm going to talk about this week's diamond of the week. And if you have any stocks, maybe we look at RSP if we have some time at the end while we were talking about the two of them. Or if you have a chart of them, that'd be cool.
Okay.
All right, so I'm going to look at Zendesk. I presented this one as a diamond to my DP Diamond subscribers. For those of you who aren't familiar with the report, 3 times a week I present 5 diamonds in the rough stock picks. They're not recommendations, they're just charts that came up on my PMO scans, the various scans that I have, and or any that I've found of interest during the week that have just popped up on my radar. So I'll present 15 a week. That gives you about 60 per month. And right now, diamonds only $25 a month. So you can do that math. We have a PMO buy signal that's come in on Zendesk. It hadn't actually given it to us yesterday when I presented it. You can see that we are right up here on overhead resistance, and there is a next level of overhead resistance for it to work on. But I really like the PMO turning up above the zero line. It's not particularly overbought, and it is rising. You can see the OBV is doing what it should. And back here, before this big rally started, we had a really nice positive divergence with the OBV. StockCharts technical rank is still very strong here. The StockCharts technical rank is really a great measure of not only internal strength, but relative strength. The calculation is done, I think about 70% of the ranking number is intermediate to long-term. So this isn't a short-term indicator. And basically they calculate all of the numbers and then they compare to its universe. And in this case, Zendesk is a mid cap, so it is comparing Zendesk to all of the mid caps. And that means with an 80.9, it is in almost the top 10% of stocks in the mid cap universe. So I do like this one. I think it's setting up well. And this is your DP Diamond of the week. All right, so let's go ahead and look. Did you have a chart for RSP up?
While we have this chart,
Yes.
I have to say there's a slight problem on OBV here too.
Oh, right. Agreed. We do have that reverse divergence we were just talking about because we have these rising tops. The OBV is above these previous tops, but price didn't get there. So yes,
Slight problem. You know, it's
problem.
not as, but it hasn't exceeded the, well, it's almost to the February top. It's almost equal to that. But anyway, I don't think there's a big deal here, but it's just one of those things you should, everything doesn't line up all the time.
Exactly. Exactly. And I had set up a stop level that would be just below the bottoms here. I don't know how, I always put this in. I don't know how deep a lot of people want to set their stops. So I just give you a quick visual so that you know going in, if you do decide to do anything with this stock, it gives you kind of an idea of where the support levels are. And if you were to set a stop based on support levels, it could be a very deep stop. 9.7% is pretty steep. So I know I like to keep mine honestly between 5 and 8%. So generally I'm not looking at stuff that I'm going to have to set a stop that deep. So just something to keep in mind. All right. Well, we do have a few more minutes. Did you want to pull RSP up before we go?
Yeah, let me take it back here. I can
Get
do
a
it
little
fast.
bonus coverage here.
One of the things that I really wanted to show, and I forgot talking about, but the Bang Plus today, you know, the tech sector didn't do that great. It was only a tiny fraction of a percent. But there were stocks within the FANG group, Facebook, Amazon, huge gains today. And that's what brought the S&P 500 up, but it didn't help the tech group so much.
Right. It's another, the big boys are running the rallies and there's deterioration or not any support amongst the other players. I always talk about small caps. I always like to see small caps competing well with the large caps because you need all of them to participate to really keep a rally going and stoke the fire.
Okay, I think.
All right. So can you just type in RSP real quick? We have just a few seconds left. There we go. So there's the equal weight. And today the S&P was up 0.7%, did we say? So you're definitely seeing that dichotomy there. All righty. We shall end it here. I want to thank all of you for being with us today. Remember to watch us on Thursday mornings, and happy weekend to everybody and happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.